I think we agree. Bitcoin and Ethereum, first of all, are friends. We don't compete. Ethereum, to me, is the new Wall Street. You know, in 1971, the dollar went off the gold standard. Okay. Now, everyone thought in 1971 the play was gold. But actually, in 1971, the dollar became synthetic. You know, I'm still bullish on Bitcoin. In the fourth quarter, seasonally, Bitcoin strong. But now we have the Fed flipping dovish after being essentially hawkish all year. That's a tailwind for Bitcoin. So I think Bitcoin gets to 200 to 250,000 by the end of the year. You know, in 2017, Bitcoin was under 1,000, and we thought it would get to 25,000 by 2022, but could get to 100,000 a little bit later. Of course, you know, 8 years later, Bitcoin's over 100,000. To us, an intermediate level for Ethereum is matching Bitcoin's network value. So I think a couple years from now, so that would be 60,000 ETH.
In this powerful and timely thesis from Fundstrat's Tom Lee, he argues that Ethereum, a chain that has been underestimated for the past 5 years, is now entering a super cycle. He contends that a perfect storm of catalysts has aligned to create a massive risk-reward opportunity. These drivers include the ChatGPT moment of stablecoins, a newly pro-crypto stance from the US government, and the institutional rush to build on a public blockchain. But the two most powerful forces, he argues, are the complete financialization of Wall Street and the rise of a tokenized AI economy, both of which are being built primarily on Ethereum.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
In our view, Ethereum probably is a chain that had become underestimated. You know, it made its all-time high 5 years ago. So when we started the treasury strategy, Ethereum was around 1,300 and its all-time high was around 4,800. But that was a case in our minds where Ethereum's fundamental story was much stronger because number one, it is the second largest blockchain. It's the largest smart contract platform. It has a huge community of developers that, in my opinion, are really benevolent focused. You know, Ethereum is trying to improve the world. But I think people thought of it as less exciting than other platforms. But then along comes not only stablecoins, which we call the ChatGPT moment for crypto, but it's really the realization that this current administration in the U.S., the White House and Congress, are really becoming pro-crypto, and Wall Street itself is embracing blockchains. And the blockchain they're doing most of the work on is Ethereum. So when I look at that combined with AI and tokenized agentic AI and robots are really going to create the need for a token economy for robots. A lot of that will happen on Ethereum. In fact, President Trump today just talked about how he needs proof of human to protect us, and a lot of that work is going to be done on Ethereum. So you have two drivers for what we think are a super cycle. So to us at 1,300, Ethereum was kind of like a massive risk reward. The digital asset treasury world bridges two worlds. One is crypto, because it invests and buys a token. And so you have to be able to speak the language of the crypto economy. But then the other world that treasuries sit in is public equities. And remember, there's 5,700 stocks out there, 5,700. So just because a company does something doesn't mean the market cares. If you look at the stock market today, the top 30 most traded stocks are literally the only stocks that Robinhood cares about, or Schwab, or even JP Morgan. JP Morgan trading probably only cares about 10 stocks, and Goldman's desk only cares about 10 stocks. Institutional investors care about sector exposure, but they always buy the leader. So, MicroStrategy is one of the most liquid stocks in the market today. It trades $3 billion a day. Fortunately, BitMine is one of the most liquid stocks today. It trades about $3 billion a day. It trades about as much every day as JP Morgan or Arista Networks or Google. We're really one of the most liquid names. And then I learned that in Korea, we're top 1, 2, or 3 in terms of trading volume. So I think that unless you're going to break into the top 30 as a stock, institutions may not pay attention because institutions want to have volatility, access to hedging through option chains, and Bitmine's a top 10 chain. And so if you're not in that zip code, institutions aren't going to pay attention. I'm still bullish on Bitcoin. In the fourth quarter, seasonally, Bitcoin's strong, but now we have the Fed flipping dovish after being essentially hawkish all year. That's a tailwind for Bitcoin. So I think Bitcoin gets to 200 to 250,000 by the end of the year. And that aligns with Mark Newton's technical targets. Ethereum, as a price ratio to Bitcoin, should recover to its prior, let's say, either average or at least 5-year highs, okay? Using a $250,000 Bitcoin, that implies somewhere between 10 and 12,000 for Ethereum by the end of the year. But I do think Ethereum is going to exceed those prior highs, and that's why I think when we get to 12, 15,000, that's what you call, real price discovery, but I don't think that would be the ceiling for Ethereum. In 2017, Bitcoin was under 1,000, and we thought it would get to 25,000 by 2022, but could get to 100,000 a little bit later. Of course, 8 years later, Bitcoin's over 100,000. To us, an intermediate level for Ethereum is matching Bitcoin's network value. So I think a couple years from now, so that would be 60,000 ETH. Michael Saylor is a very good friend of mine. In fact, I spent a lot of time explaining to him and thinking around Ethereum and Bitcoin, and I think we agree Bitcoin and Ethereum, first of all, are friends. We don't compete. But that our strategy is very different. I'm not competing. Bitmine is not trying to get an institution to buy us over MicroStrategy. In fact, we think an institution that owns MicroStrategy also has to own Bitmine because we are different parts of the crypto economy. Ethereum, to me, is the new Wall Street. In 1971, the dollar went off the gold standard. Okay. Now, everyone thought in 1971 the play was gold. But actually, in 1971, the dollar became synthetic. It no longer was backed by anything. And that's when Wall Street stepped in and said, okay, we got to make sure that the euro, the German franc or whatever, German mark or the French franc doesn't become dominant. So Wall Street built products to make sure everyone used a synthetic dollar. Wall Street was the big play in 1971. In 2025, we're making everything synthetic. We're starting with tokenizing the dollar. And then, as you know, Wall Street's going to tokenize equities and everything I just listed. Massive opportunity. Ethereum is in a super cycle because of that. But Bitmine can play a role because it can become a payment rails. It could become almost a bank. It can help as by owning the largest holder of Ethereum today. It's a kingmaker on the DeFi. We were doing moonshots. We invested $20 million into 8Co, which is investing in the WorldCoin, and that already, in just less than 10 days, has already returned more than 10 times our investment. So I think we are becoming a financial infrastructure company.
The core of Lee's analytical framework is his characterization of Ethereum as the new Wall Street. Drawing a parallel to 1971 when the dollar left the gold standard, he argues that while gold, Bitcoin, was the hedge, the real long-term opportunity was in the synthetic dollar that enabled Wall Street's global dominance. Today, he sees Wall Street tokenizing the entire $400 trillion real-world asset market, and they have unequivocally chosen Ethereum as their foundational layer due to its neutrality and reliability. This positions Ethereum not just as a cryptocurrency, but as the base protocol for the biggest financial transformation in modern history, making it what he calls the biggest macro trade of the next decade.
I wouldn't blame anyone being surprised because we've been writing about Bitcoin since 2017 when it was under 1,000, and at that time we posited that institutional investors would want to own Bitcoin because of its status as digital gold. And today that's really the mainstream narrative. But this year, myself and Mosaics, who helped me engineer this Bitmine transformation, we started to see the possibility that Ethereum was entering a super cycle, something that would last 10 to 15 years. And if that was true, we'd want to have a role in actually helping sort of guide Ethereum and traditional Wall Street onto Ethereum, and that's why we did the BitMine strategy. Stablecoins are just tokenized US dollars right now. But we're going to be seeing tokenized equities and credit and real estate and loyalty points and intellectual property. Intellectual property is the largest component of US CapEx. That should be on-chain. So is it a $400 trillion market? And stablecoins are $280 billion right now. I think that there's room for plenty of blockchains to benefit. But I do think the idea of a fat protocol is important for people to keep in mind. That's what Union Square Ventures first wrote about. I don't know if you guys remember from 2011 or 2013, but as stablecoins are created on a layer one, that layer one captures the value. That payment rail concept is the exact same reason banks, as you put a deposit in, the value of the company actually equals your deposits because they make a loan with that deposit. So I think in many ways there'll be room for many blockchains, but the majority of this is taking place on Ethereum. And I'm not going to throw shade at any other layer ones because I do think there's room for multiple, but Ethereum is a truly neutral chain. I don't think anyone ever feels that someone's got a fat finger tilting it in their favor. If you think about how Wall Street operates, they will only want to do and operate on a neutral chain. If one of the banks creates their own layer one, calling it, I don't know, too big to fail bank, layer one blockchain, no one is going to feel that's a neutral blockchain because that's going to always tilt it in their favor. I mean, that's just how Wall Street operates today. If a bank is the axe trading a bond, they have perfect information and they use that against anyone else that trades it. So I think it's important for Wall Street to find a public blockchain that's neutral, and today the biggest one is Ethereum. If you look at DATs, it's like this. It's no different than looking at any other business, which is that whether you're looking at social media or chips or gaming or media or clothing, consumers and investors probably only want to have 2 to 3 things that they consider differentiated stories. And so I think in the digital asset treasury world, that's going to be pretty true by token. So in Bitcoin, MicroStrategy by a country mile is a differentiated story. I mean, they're so big now, they have 3% of Bitcoin, but they'll always, in my opinion, have a NAV premium because it's got a sovereign put. I mean, the day the U.S. is serious about getting 1 million Bitcoin or, another country, they're going to buy MicroStrategy. And in Ethereum, I think there is a lot of room for differentiation because Ethereum, one, it generates a native staking yield, and you can also invest in DeFi or also create payment rails around Ethereum. So I think there's room for more than one. Like, you don't have to just say there's going to be one survivor, but I think executing is really important. I mean, there's a lot of digital asset treasuries out there, and they're not all created equally. I mean, I think that it's going to be important for other Ethereum treasuries to be differentiated. I do think there's room for more than one, but the market is also picking winners and losers. BitMine trades $3 billion a day. MicroStrategy trades $3.4 billion a day. I think the two of us represent 95% of all trading volume in the DATs. So if you look at the hundreds of DATs, the two of us are 90% of the trading volume. That means institutions really only want to buy us. In terms of total market cap, we are basically a large cap stock now. So we're going to be part of a lot of these major indices when they rebalance, which means we'll have passive flows. That really helped MicroStrategy too. And that's actually what sustains valuation premiums because now you have someone who's buying every day.
This supercycle thesis leads to stunning price projections. Lee forecasts a year-end price of $10,000 to $12,000 for Ethereum, but he sees this as just the beginning of true price discovery. His intermediate target is for Ethereum to match Bitcoin's network value, implying a price of $60,000 per ETH. In this new landscape, he argues that investors will gravitate towards differentiated, highly liquid vehicles. He notes that while there are hundreds of crypto treasury companies, MicroStrategy and his own BitMine already account for 95% of all trading volume, demonstrating that institutions will only allocate to the clear market leaders in each respective token ecosystem.